Hi, good week to all. This is Kelvin here again. Welcome to this week's latest edition of our weekly technical outlook on the major stock indices, the usual indices that I cover on the key levels and the trend bias to watch for this week. The SPX 500, the NASDAQ 100, the Hong Kong 50, the Japan 225, and the German 30 index for the week of 5th of July to 9th of July. All right. So before we start, let's take a look at the disclaimer slides first. All right. So before we go into the details of the various indices trend bias as well as the key levels to watch for this week, let's take a quick kind of a recap of what happened last week in terms of the raw momentum analysis. So what I did over here is I break down this time in Q1 performance as well as Q2 performance. So as you all know that we are now in the month of July, which is the start of Q3. So we have we call it Q2 has already passed. So very interestingly, let's break down one by one. All right. So weekly performance last week. Okay. So what we could see over here is the U.S. stock indices pretty strong, except for the small cap, the Russell 2000, negative 1.23%. Overall, it's pretty much of a healthy market in the US market, especially on the NASDAQ 100, which we have been talking about in the last 3-4 weeks, looking for a potential outperformance against the rest of the US major indices. We're talking about led by high quality tech stocks, which indeed it turns out so far so good in this team play. So NASDAQ 100 positive 2.67 for last week. So if you look at its prior 4-week average, also the strongest among the pack of the US stock indices at positive 1.14%. So it's the prior 4-week average. So if you look at very starkly in terms of its sterling's outperformance in Q2. So Q2 2021 performance 11.18%, double digit, way surpassed the rest of the US indices, the S&P 500 8.17, the Dow Jones average, which is the cyclical one, heavily weighted towards cyclical. That means we are talking about sorry, let me go back again. Okay, which is heavily weighted on energy, materials, and as well as these industrial stocks, 4.61%. Then the small cap, 4.5%, almost the same. So what we could see over here is a strong outperformance in the last 3 months for the NASDAQ 100, which is heavily concentrated towards quality tech stocks. So why is it so? Because those who actually followed me in my Twitter and as well as my Q3 market outlook, which I shared with you all last week. So I did mention that one of the reasons is due to the spread of the US Treasury yield, the 10-year minus 2 year that is coming down. Okay, so those who find out more details about that, later I'll share with you my Twitter handle, which consists of my quarterly outlook, my Q3 quarterly outlook, as well as my daily market updates. So all these are being shared in detail over at my social media platform. So you can actually take a look at that. All right. So what's interesting over here is Hang Seng as well as the Hang Seng Tech Index. So Hang Seng Tech Index and Hang Seng Index and Hang Seng Tech Index has been pretty much on the rate for last week as well, especially towards the later part of last week, where the market reopened after 1st of July, which is i.e. the anniversary of HKSAR, that means the return of Hong Kong to China, and as well as the public holiday in China where they celebrate the 100-year anniversary of the CCP. Okay, so after that day, particular day, the stocks actually sold off pretty badly. Or we talk about especially China tech stocks. So what we could see is that the China big tech stock, which is represented by the Hang Seng Tech Index, actually down negative 4.16%. So there's a lot of controversy going on. In fact, it could be selling prior to the latest regulatory clampdown on this ride hauling firm in China called TD Chunxing, TT in short. So TT is similar like Grab in our Southeast region. So there was actually cut the story short, there was actually a shutdown on their app. Okay, on their app on Sunday by the China regulator that's in charge of cybersecurity. The reason they're giving over here is that due to some business practices that is unfair or uncalled off, and they actually didn't actually take a look at it and didn't rectify it. So nothing very clear to actually say what's going on. But the positive thing about this regulatory clampdown is the current app user in China are still able to use TT app application. Right. So those who follow TTs, they actually launched their mega IPO. I think raised close about 4 billion, 4.4 billion, which is the second largest ATR listing in US. They list in US, they haven't list in Hong Kong yet. Okay, so it's a US ATR under the ticker code TT. So it is the second largest US ATR listing so far since Alibaba listing about a couple of years back. So with that, actually, that saw actually a sell off in fact today as well. Later I'll touch on the Hang Seng Index technical configuration. All right. So in the summary, what we see over here last week was an underperformance of Hang Seng Tech, negative 3.34%, negative 4.16%, 4.17%. So also below its prior 4-week average. So Q2 performance was kind of also pretty lackluster. So what we could see in the Hang Seng Tech, it actually managed to reduce a bit of its losses at almost unchanged mark at negative 0.35% versus a negative 3.6% in Q1. So it's very interesting to see this week after this latest regulatory clampdown, which seems to me on this DD Chunsing on China Big Tech. It seems to me there is an indiscriminate sell-off on almost all the China Big Tech today. Especially we're talking about JD.com, Tencent, which is the big brother. Then you have Alibaba, and you have the smaller guys like NetEase. Then you also have Meituan, so as well as Baidu. So it's very interesting to see how the markets plays out this week on the Hang Seng Tech Index and the Hang Seng Index. So later I'll share with you on the Hang Seng Index chart itself, what are the key levels to watch. So Nikkei 225 last week also kind of lackluster, almost negative 1%. If you look at the prior 4-week average performance, almost no change. Q1 performance 7%, then Q2 negative 1.33%. So in fact, you look at the whole of Q2, it has been technically it's been trading since hitting the 30-year one high in February high this year. That was a 31-year high. So it has been trading in a kind of a descending range configuration. So it's just ranging. So that's why it's kind of a lackluster movement. So later I'll share with you all what are the key levels to watch on Nikkei 225 in order to break out from this close to about 3 months of sideways range configuration. So German DAX slowly inching upwards 0.27% last week. Pretty much cautious, oops, sorry, due to the sensitivity of my mouse. uh, German DAX, very cautious last week move, slowly inching upwards to retest its current all-time high that was printed about 2 weeks ago, due to this resurgence of this COVID-19 infection case in Europe, and it actually tends to actually right now kind of dampen the reopening story and the summer vacation in Europe, where everybody is pretty much cautious about traveling. So that actually suck out a bit of winds from the bullish tone in the German DAX. But overall, what we could see is pretty healthy. I would say Q2 performance 3.48%. But what's interesting over here is the high tech stocks are where previously it was underperformance in Q1 and now it become outperformance in Q2. So if you look at my Q3 outlook, we could see potentially it could still persist in this outperformance on the Nasdaq 100. So for the reason why, do follow me on Twitter to take a look out at my explanation where I share it in my social media handle, yeah, on my daily market updates. Okay, so now very quickly, just a quick breakdown to actually reinforce our what you call it, technology outperformance. Is the breakdown of the 11 SMC sector last week. Top performance, yes, definitely information technology. We have consumer discretionary as well, which is the biggest. We have a high weightage stock inside, which is Amazon. Then we have a one defensive healthcare and communication services, which considers tech as well because the two big names there are Google and as well as Facebook. Okay, pretty strong outperformance, and what we could see is the underperformance of one of the two key cyclicals, which is the financials, negative 0.8%, and energy down negative 0.8%, despite WTI crude prices hitting 3-year high last week. All right, so that's more about the OPEC news. So there could be some point in time there could be a bit of disassociation between energy stock and WTI crude oil prices on a short-term basis, the correlation. So that correlation could actually play out in these coming weeks as we head into Q3. All right, due to the rotation play within the sector itself. Then you have 1 month tech stock as well at the top of the table, 8.29%. And we start to see the bottom, which is the cyclicals. All right, financials negative 6.2. Pardon me, industrials negative 6.2. Financials negative 3.3, and materials negative 5.35. All right, energy almost unchanged for 1 month. Then rolling 3 month. Okay, this is a rolling 3 month till 2nd of July, not exactly quarterly end. It's a rolling 3 month till 2nd July. So you could see real estate at the top, information technology at the top again as well. All right, at 10.64%, then followed by consumer services, communication services, pardon me, which is I explained earlier, it is considered as a technology sector, technology heavily weighted towards tech as well, due to the top two stocks that are heavy that the top two heavy weightage stocks inside communication service is Google and Facebook. Right. So energy, if you stretch out the 3 months because of the earlier first 2 months of outperformance, all right, in somewhere in May and early May to June, it's 8.9%. So, oops, sorry about that. Okay, 8.9%. Then at the bottom, you will see your industrials, materials, consumer staples, 3.4%, and the one almost unchanged at utilities. So if we to stretch out for 3 months running, right, all the sectors are in green. All right. So yes, some sectors are actually underperforming against the rest because of the rotation play. Uh, because this is pretty much normal in a broader based stock market. But what we could see over here is so far I do not see a kind of a major reversal or a reversal to change its medium-term uptrend on the US stock indices, as well as the major uptrend that has been in place since March 2020 low. So perhaps for this week, we may see a bit of pullback, minor pullback, this given that the S&P has risen close to about seven consecutive daily all-time high. So that was the best record since 1997. All right, so it's a very fantastic streak. So perhaps a bit of profit taking along the way. Then bear in mind that today is that the cash market, if we talk about the cash stock market for the US market is closed for today because of uh, on Sunday, 4th of July is a national day, the Independence Day. So today, Monday, is a kind of a public holiday in the stock market as well. So do expect a bit of lower liquidity, despite the futures is the stock indices futures are still trading on Globex. Okay, now very quickly, let's go to our chart. Okay, I believe that most of you are eager to know what is the key levels to watch on the major stock indices. Okay, let me share with you all. All right. Okay, good. So first, before we jump into S&P, the one of the risk proxy that that I always share with you all is the semiconductor ETF. Semiconductor being the heart of the group, one of the proxy to watch in terms of risk on, risk off behavior. So far, since the low of March 2020, it has been trading in a major uptrend. A bit of hiccup on the sideways configuration on early this year, on 16th of Feb, that is traded sideways from here. Ever since it formed a low of 16th of May and prices start to reverse up again. What we could see over here is potentially a bullish breakout on this sideways, kind of a sideways configuration in February. Okay, that was in place since February. So what we could see is higher high and higher low. And the key support to watch on a weekly basis will be 423.60. Definitely the major support will be the 200-day MA at 392.50, which correspond to the previous swing low of this sideways range configuration. Okay, that is still holding pretty firmly. Okay, so what we have over here is that we have a all-time high resistance derived from a Fibo expansion level at 458. So prices seems to be trading in a kind of bullish flag formation over here. So as long as 423.60 holds for this week, we're still expecting a potential push up to test this 458, then a break above it, could see 495 next. All right. So overall, the trend is still medium-term uptrend is still intact for the semiconductors ETF, iShares PHLX SOX ETF. Okay, ticker code is SOXX. Momentum supported by a very robust, I would say that positive momentum as indicated by the daily RSI, higher high, higher low, holding above this corresponding ascending trendline support that is now at 54% level after a strong bounce up from this major support zone at the 42 and 40% level, which is the oversold level. So all in all, right, what we could see is no signs of risk off, as indicated by one of the risk proxy, which is the semiconductor ETF, the share price, the technical analysis on the semiconductor ETF, to be precise. All right. So now, jumping on next to the SPX 500. So our those who actually follow my video, I like to look at the daily trend, the daily chart first, to give you a better feel about where the price is heading, you know. So what we could see over here is, yes, this is what we call the recent strong push-up move in the last 7 days, 7 consecutive days of higher high and all-time high. So what we could see is a bullish breakout. Okay, it's a bullish breakout from a sideways range from 10th of May. Okay, this sideways is pretty much lackluster. So what we could see only is this push down here. This push down here, like I recall in my previous video, is more of a fake move due to option expiry on Friday, 18th of June, and as well as a bit of noise from the post Federal Reserve meeting. So take a look out at the previous day move. It start to shape as expected, the strong reversal candle. All right. So all in all, it actually been supporting in this ascending uptrend channel since 23rd of March 2020 low. So that is the start of our ongoing major uptrend phase for March 2020 low. So all in all, what we could see over here is that the start of the medium-term uptrend, which is March this year, can break down into the fractals, is also still intact. All right, higher high, higher low. So what we could see over here is currently for this week, the key support definitely were to come in at 4250. All right, 4250 level, which is also the lower boundary of this ascending channel support from March 2020 low, and as well as the 50-day moving average that is coming to add into support in a couple of days time because it's moving. All right, it's a dynamic moving average. Then what you could see is that RSI inching upward already now, so it hasn't go into the overbought region yet, and as well as the extreme overbought region is around 81%. So this extreme overbought region, okay, what did I did over here? Let me put it down here. Okay, it's at around 77%. 7% on the app, give or take, since 23rd of December 2009. So this is kind of a overstretch. Think of it as overstretch rubber band. Upon hitting this 77%, thereabout, you could see upside momentum getting overstretched, where that we could come into a kind of a deeper corrective pullback. Okay, that means talk about multi-week pullback or multi-week decline that more or less in terms of reward risk ratio that offer a better opportunity to turn bearish on a weekly basis. Okay, so at this point in time, the odds are still in favor of the bulls, all right, in terms of a multi-week perspective. Then now the strategy. That means we're talking about the levels to watch with the strategy for this week. So still recall that last week we have a target at this 433 400 433 4330 slash 4360. Pardon me of this tongue twister. All right. So it's approaching very close as expected. On Friday, which printed a high of 4355 after the non-farm payrolls data. Okay, so what we could see now is very much over here is that I'm looking at purely from a technical perspective is the trend is still evolving within a minor ascending channel from 5th of March 2021 low. Then you have look at the next Fibo expansion level taken from a reverse degree will be at 4450 slash 60 level after 4336. So all in all, I could see yes, the 4-hour one has already reached the extreme overbought level at 80, but the 4-hour RSI, so indicating to us that this is what I mean by a potential multi-day, maybe 1 to 2 day of pullback. This is 4-hour chart. I want to pullback. Why do I still favor a pullback rather than a reversal of its medium-term trend because of the daily element I shared with you earlier on, and as well there's no bearish divergence on the 4-hour RSI. That means 4-hour RSI showing higher high, in line with the recent strong push up. And what do we mean by a bearish divergence? Then take a look at this example here. So this is what I mean by a bearish divergence, where price starts to push up higher over here. Okay, let me draw here higher. Price action pushing higher. But if you take a look at the RSI, actually starts to shape higher low. All right, even though price keep going up. Okay, right. So if you could draw a line, a descending trend line, something like this. All right, you can see, able to see it. A very clear break. What you call it? Momentum negative momentum. That means momentum has starts to slow down after hitting this extreme overbought level. So what we could see over here is that at this moment in time, it hasn't displayed such bearish divergence yet. right, in the past, where it hit a peak, a medium-term swing high of 10 of May, then thereafter it did that more pronounced pullback. So all in all, right, what we could see over here is more of a minor pullback after hitting the extreme over high level, like what previously over here, this kind of pullback. All right, what we see over here. Okay, so it could be shaping something similar to that. So what we could do is that I will tighten the key short-term tighten the key medium-term pivotal support this week to 4250. All right, and to look for a further potential up move after 4336 to target or to see the next resistance at 4450/60 level, as long as 4250, 4250 key medium-term pivotal support holds. That means there's no daily close below it. All right. So now moving on next to the NASDAQ. Okay, the NASDAQ. Okay, let's go to the NASDAQ. So what we could see here is still recall that NASDAQ 14,040 is a key level to upside trigger level. So after we're talking about this level, we're talking about since about a month ago. So after this level break, we could see the potential acceleration. So far it has happened. It has played out as what we expected. That means the levels we got are pretty much robust and or what you call it, effective. Okay, so in terms of technical analysis, the key of analysis is not drawing lines. The key of technical analysis, you need to have a bit of skill set and time to define key levels objectively rather than just drawing lines. So all these take a bit of art. So a lot of people say technical analysis is pretty easy by just drawing. If you realize no, you got to determine what lines are or what levels are much more significant compared to the rest, and it takes a bit of skill to actually do it. Same thing for fundamental analysis. How do you do discounting? What is the cash flow for you to discount, and how do you estimate the cash flow, the future cash flow, and what is your what I call it appropriate discounting rate for you to discount to formulate or to find a fair value for a particular stock or in any instrument. Same things for technical analysis. Technical analysis is how do you define which is the important level to watch that could actually indicate significant movement once this level has been taken out either on the upside or downside. All right. So now, cut the story short again. So basically, 1440 breakout, acceleration as expected. No signs of bullish exhaustion so far. RSI's no bearish divergence, higher high at the overbought level, but hasn't hit the extreme over level at 80%. So this 80% is if you go all the way back is here, 27th of December 2019. Okay, so it's coming up for like a momentum resistance. So still a bit of room more to push up before we have to be more cautious of a potential multi-week pullback. So for now, multi-week pullback may be a bit remote at this point in time. Okay, so go to the strategy chart. So that strategy chart, which is the 4-hour chart. So what we have is that if you recall, this last week we have a resistance or target at 14,780. Very close already. Last Friday printed a high of 14,736. So what we could see here is RSI almost coming at the extreme overbought level as well on the 4-hour chart. So what we could see is potential pullback as well to 14,580. Key medium-term pivotal support for this week, I will tighten it to 14,320, which actually correspond to the lower boundary of this short-term ascending channel that is in place since 13th of May 2021 low, and as well as if I were to do a Fibo retracement level, taking from the low of here, you retrace up. So I think it's pretty close to 23.6%, which are tidy up slightly lower here to take into account of this minor congestion area of 26th of July 2021. Okay, so all in all, what we could see here is no clear signs of a multi-week pullback yet, perhaps only a multi-day pullback potentially based on the current technical configuration for the NASDAQ 100. So what we could do is tighten it to 14,320. So as long as 14,320 holds for this week, we're still expecting another potential leg up to test the next resistance at 14,950/15,130, which is the Fibo expansion level. Okay, and as well as a confluence level, as well as the top of the upper boundary of this short-term ascending channel. okay, on the NASDAQ 100. Okay, so now moving on to the Hang Seng Index, which is the Hong Kong 50. Okay, so Hong Kong 50 as well, post CCP 100-year anniversary and post 1st of July holiday in the kind of the handover of from Hong Kong to China. So what we could see here is a big drop, a stock drop from last week, late last week, and going to today's session as well. As I explained earlier, it's more or less triggered by the latest regulatory clampdown on DD Chunsing. All right. So what we could see here is now back again to the 3-month low, which is the 3-month range support at 28,000 slash 27,600. Then you have a kind of a impending bullish divergence on the 4-hour RSI, indicating to us that hey, this current down move here is a bit of a stretch again as well, reaching to some kind of exhaustion level where we may see at least a short-term bounce towards 28,840, a break above at most take up to the trigger level again, which is 29,575. So 29,575, what is it? It's actually the level where is the neckline resistance of this potential basing formation that is in place since March this year, which is 3 months already. Yeah? So the neckline of this potential basing formation is at 29,575. So for this week, I'm still looking at these two major levels to watch: 28,000 to 28,000 slash 27,600. Uh, One thing positive is that the current last 4 or 5 days of down move, in terms of momentum rise, the downside momentum seems to be overstretched as indicated by the bullish divergence, impending one that is seen on the 4-hour chart. All right. So what we could see now is at least a potential, maybe a minor bounce towards 28,840, a break above. Maybe it could take us up to retest the 29,575, as long as this 28,000 slash 27,600 key medium term pivotal support holds. So if you start to see a daily break below this level, it could take us down much lower again towards another corrective decline towards 26,650 for the Hong Kong index. Okay, the Hong Kong 50 index. Okay, now moving on to the Nikkei 225 or the Japan 225, we call it in our platform. Okay, so Japan 225 is also pretty range. So this is what I mean by the descending range. Okay, of this descending range, descending expanding range since hitting the high of 16th of Feb, which is 13,716, which is also a 31-year high. So ever since then, it's been trading in this kind of descending expanding wedge formation. So some people can call it also a bullish flag within this month uptrend that is still intact since 16th of March 2020 low. So what we could see here is pretty much boring until it's able to break out from the expanding wedge resistance, which is the trigger point, which is 29,600. So till then, it will be sideways, but holding above the 200-day moving average, which is our key support to watch for this week as well. No change for this week at 27,500. All right. So now moving on to the 4-hour chart, right? So for 4-hour chart, what we could see here is last week it's just trading in the middle of this range, push up, then come down again and trade kind of sideways. So still no change. So what I will do is I will still use 27,500 definitely as my key support, key medium term pivotal support to watch for this week. So what we could see here is we could potentially see a bit of reversal again, but within this range, expanding range to at least retest the top of this expanding wedge range resistance, which is at the upside trigger level at 29,600 for this week. So still trading within that range. So unless that 29,600 break up, which is the daily close above it, then we could see further potential upside. If not, it's kind of a pretty much boring range configuration for the Japan 225. So levels to watch will be definitely 27,500, then potential push up because you look at the 4-hour RSI is now coming back towards the oversold region again. So potential push up towards 29,600. So unless we could have a daily close above 29,600, then we could kind of see further potential up move. If not, it's still within that boring range configuration. All right, since February high. All right, so it's close to about, give or take, it's about five months really, close to come out 5 months, kind of a descending expanding wedge configuration. right, for the Nikkei 225 or Japan 225. So now moving on to the German 30. So German 30 is a very slow and steady up move. Last week was pretty sideways. No signs of a toppish configuration yet. Holding above the 50-day moving average, which is acting as a support at 15,400, which is also the former swing high area of 10th of May or 7th of May. Now I think as a pullback resistance, a pullback support, pardon me. So no no major kind of a toppish configuration. It's kind of a slow kind of a churn up move so far, as seen on the daily chart for the German 30 index. So with that, right, I will leave my level. So no change for the levels on the German 30 index. Was pretty much sideways last week. So still using the excess medium-term pivotal support, which is 15,000, pardon me, 15,200. Looking for a push up towards the next resistance at 16,070 slash 16,200, which is defined by a Fibo expansion level, a cluster of Fibo expansion level that is coinciding at this level at 16,070 slash 16,200. So, but however, if we start to see a daily close below 15,200, this is where we may see another choppy sideways movement, push down to actually test the lower boundary of this sideways range that is in place in 16th of April all the way down, which is 14,800 level. All right. So all in all, still no change for the German 30 levels, German 30 index in terms of levels to watch. All right. So overall, what we could see over here is still expecting pretty strong up move on the major US stock indices, with NASDAQ 100 being the outperformer. Yes, even though the two US indices, the S&P 500 and NASDAQ 100, start to shape a bit of very strong up move in terms of on the daily basis. Since last week, I still don't see the start of a multi-week corrective move yet in terms of a fractal approach. All right, so perhaps we could see a bit of minor decline in these 1 to 2 days before resuming its uptrend. Okay, it's medium-term uptrend again, or multi-week uptrend. Then for the Japan 225 will be a pretty much boring range, a push up towards the top of the range, unless it could break above this 29,600 level. Then for the Hang Seng, it's actually for the Hong Kong 50 is back towards the 3-month low, which is the medium-term pivotal range resistance that will be highlighting in the last 4 weeks or so. Okay, which is the 27,000 level to the 6,800 level. All right, so a kind of a push up towards the top of the range again, as long as this level holds. All right, because right now it's a bit of negative sentiment due to this indiscriminate selling on all the major China tech stock, big tech stocks, that has been triggered by the weekend latest regulatory clampdown on Sunday on China TT Chunxing. So you want to find out more about all, because within a weekly video I cannot explain much in detail. So you want to find out more about what's happening in the market, especially on why I feel that is this NASDAQ 100 outperformance that's going to last for this coming quarter. You actually can follow me at my social media channel, which I post regularly over here, which is my Twitter handle at Kelvin SC Wong over here. So what you could see, once you follow me, you can actually listen to my quarterly outlook. So this I explain more in detail why I'm expecting this NASDAQ outperformance, which is tech outperformance in Q3 over cyclicals. All right. So what we could see over here, this is the daily update as well. I have some chart of the week. So you can actually follow me. You can actually see my my daily stuff, and if there's anything new update, fast one, I'll actually tweet on my Twitter over here. So this is a kind of a if you guys want to find out more about what's happening in the market on real time, on the not really real, I would say not really 100% real time. I would say that fast moving news that is driving the market, or what's key driving the market, do follow me on my Twitter handle. So I actually tweet almost every day, okay, except in the weekend, okay, where everybody needs to take a break, yeah. But I will start tweeting on Sunday evening, okay, if there's any major weekend news that's happening, especially what we see over here on Sunday, yeah. So this is where the OPEC news as well. So those who want to find out more about stuff about trading education, you can actually follow us at CMC channel, CMC Singapore YouTube channel. Subscribe to it. So this is where I also post educational videos on how to use technical analysis to trade. So do give a subscribe. Click on subscribe as well to find more great content in our CMC YouTube CMC Singapore YouTube channel. So with that, do have a great trading week ahead, and I see you all next in my next video. Thank you. Yeah.